Today was a wild day for the stock market. It might seem on paper like a normal flat day if you just look at the S&P price, but there were a lot of secret moves behind the scenes that will have a consequential effect in the near future. So stick around because that's what we're going to break down today. Now, let's just get right into it. This right here is the S&P chart for the day, and as you can see, we closed down just slightly, basically flat on the day. And you might be thinking, well, what am I getting at? So right here, you can actually see there were some big moves this morning, and we're going to get to that in just a second. But let's quickly move over here. This is the stock screener for the day. It basically is a chart where you can see how every sector performed for the day. And today is actually a super interesting day. It's kind of like a salad full of reds and greens, and actually, today the green stocks were actually the tech stocks for the most part. As you can see, Nvidia was up 3%, Broadcom was up 5%, Amazon and Meta had some nice green days, and really all of this semiconductor sector and computer hardware, it's all up. And actually, the red stocks are the ones on the outside, which are mostly the quote unquote recession proof stocks, meaning that they are more safe, assuming we go into a recession, which a lot of people are fearing. And it is all because of the Trump tariffs, which we are going to talk about in just a second. But yeah, it's really interesting to see this shift because actually, what tends to happen in uncertain periods is tech gets sold off and people start buying stocks like Coca Cola or Pepsi, right? And now we're actually kind of seeing the opposite today, and people are actually selling those stocks and moving their money into tech, and that's really really interesting, and it's something that we haven't seen for a long time, and it could potentially suggest that the market is trying to find a bottom. Obviously, if we look at the S&P, we are down 13% year to date, and it was a lot worse at one point. And we haven't really gotten any real signs of a bottom, but this could be one of them because the fact that people are willing to put their money into these riskier assets is pretty promising. And I definitely think it's a good idea because stocks like Nvidia and Broadcom are down 40% from their highs. And I think the opportunity is great here. And at some point, these stocks become too cheap to ignore. And maybe today is that point. Now, let's go back to the S&P on the daily chart, and let's just actually talk about what happened here. So in the morning, we opened in the red by about 3%. And this is, keep in mind, following a 5% red day on Thursday and a 6% red day on Friday. So we were down 11% or so going into today. And yeah, we opened down another 3%. So it was just looking really really awful. And we continued that sell off all the way here until 9:45, and we were actually down 5% at the worst of it. And I believe the Nasdaq was down like 6. It was basically a complete disaster, and it was kind of giving those flashbacks of Black Monday. A lot of people said we were going to have a Black Monday kind of day today, and at this point it was looking like they were right. But then we got this very sharp reversal, and we actually ended up going above our open level, and we kind of chilled here for a second, and then here we got this huge jump. And let me explain what happened here. So basically there was this fake headline going around, and it was actually released by Goldman Sachs. That's what got the market's attention. And basically it said that Trump was delaying the tariffs, all tariffs except China, by 90 days, which is a whole 3 months. And that would be absolutely huge, right? So the market instantly jumped on that, and we jumped big time. At one point the S&P was up 3% today, and that lasted for about 10 minutes, but it was a really really nice green to see after so many red days. And a lot of stocks, individual stocks, were up between 5 and 10%. Some of them were even up 15. I mean, it was just absolutely wild, wild stuff. But Then turns out the headline was fake, and we immediately went back in the red. How ironic. Well, yeah, it turns out the headline was fake, and I don't know who at Goldman Sachs decided to publish it, but yeah, the White House came out about 10 minutes after the headline was posted, and they said that it is fake news, and obviously we immediately erased all the gains, meaning we went from a negative 5% day on the S&P to a plus 3% day, and then all the way back down to minus 3%, which is just insane. And actually, a cool statistic, this is the most intraday volatility we've had on the S&P 500 since 2008. And that was the global financial crisis. That was one of the most volatile times of the 21st century, apart from COVID. And yeah, I mean, it's just crazy that we're getting this kind of volatility now. And this is nothing like 2008 or the COVID fears or the Great Depression or anything like that. And yet we're getting this much fear in the markets. And basically for the rest of the day, we just kind of stayed flat. Then we kind of went green for a little bit, and then back in the red, then green, green, red, the usual, and we end up flat. So we're now still down 10% in the past 5 days. Obviously, those 5% and 6% red days last week were not fun, and it's going to take some real effort to make it back. And I feel like the only way we will make them back is if Trump delays the tariffs. And this is what I was talking about in the intro. This is the big news in my opinion, that the market is willing to rally if Trump gets rid of the tariffs. Like based on the 3% pump we saw from a minus 5% day, so that is like a 9% intraday swing. The market is showing that it's ready to rally potentially back to some recent highs if Trump can either get rid of his tariffs or he could make some deals. And unfortunately, Trump kind of said today that he's not going to pause the tariffs, but obviously, with Trump, you never know. He could change his mind overnight, and he could come out tomorrow and say that we're delaying tariffs or like we're lowering the tariffs on China. By the way, speaking of China, Trump did raise, or he's threatening to raise the tariffs to 100%, 104, I believe, if China doesn't remove their tariff that they just placed on us not too long ago. Now, I know that's a lot, and it is really. There's been a lot of news lately, and it's kind of hard to keep up with it, but that's kind of our job when it comes to analyzing the stock market. And yeah, there's a lot of stuff going back and forth between us and China, but ultimately, I do hope that we can reach a mutual agreement with them because that would be beneficial for both us and them in terms of not just the stock market, but our economies and just the fact that we are a close trading partner with China, and getting into a trade war with them would not be an ideal outcome. Now, another thing that did happen actually is after hours, we did go up another 1% on the indices, and there isn't really a reason to that. There's no major headline or anything like that. It's to me, it just feels kind of like a technical move, meaning that there are no fundamentals or real news to kind of support us going up. It's just the fact that we went down so much that investors feel like there's no more room to go down further, and that's obviously not guaranteed. We could go down further, especially if Trump kind of doesn't give us any tariff updates or doesn't reach any deals in the near future. By the way, he puts his tariffs in on April 9th, which is 2 days from today, and yeah, we're gonna see kind of if we can get deals done before that. So he actually has a very limited amount of time for that. And yeah, the market's kind of showing that we are we are nearing a bottom. It's not official yet, and we'll see how things play out. But another important thing, actually, this week that we're going to transition into is the Fed. The Fed does have a meeting on, I believe it is Wednesday. Yeah. They're going to have the FOMC minutes, which is basically a meeting that they do every 2 months or something like that. And, a lot of people are thinking that they're going to potentially talk about emergency rate cuts. And emergency rate cuts, they don't happen too often. Actually, the last one we had was during COVID. And back then it was kind of needed because you can imagine how, like, obviously interest rates were super low and inflation was going, unemployment was going to the moon, and it was obviously a recession, so they needed to emergency rate cut. But it's typically not seen as a good thing if we get an emergency cut. Now, there's no kind of confirmation that they are even considering an emergency rate cuts, but there is that possibility. But that's just a rumor, so don't take it too seriously. But on Thursday this week, we do actually have the CPI reports, which is inflation, and that's going to be pretty important. I think inflation is probably going to go higher just because tariffs tend to be inflationary, and everyone has said this. Even Jay Powell himself has said that if Trump kind of proceeds with very high tariff rates, then inflation could potentially rise and go further away from the Fed's 2% inflation goal. And obviously, if it moves up, they wouldn't be able to do rate cuts, and rate cuts tend to be good for the stock markets. Now, Trump has said multiple times before that he wants Jerome Powell to do a rate cuts, but Jay Powell in a recent press conference has kind of said that he's not going to listen to Trump, or he's not going to help Trump out, because obviously the Fed is not politically affected, and they're just going to do what they think is best for the economy. So if Trump gets us into some kind of recession, I don't think it's going to be blamed on the Fed at all, and I don't think it's going to be the Fed's job to get us out of it. Well, it is kind of their job to do their best, but obviously it's going to be tough for them if Trump proceeds with a full-blown recession. But I don't know if a recession is what Trump wants. He didn't fully deny a recession. He has said in interviews before that, or he hasn't said anything, but he hasn't denied when he was asked, are you okay with a recession happening, as long as that means that America will benefit in the long term. And he didn't say that. He didn't say anything like I want to fully avoid a recession or anything like that. And obviously Howard Lutnick, has also said that he kind of doesn't care if we get into a recession as long as the country benefits in the long term. And I think Trump's going to go through with these tariffs, and we'll see how that affects inflation, but we'll see the reading on Thursday. And then depending on what we see, the Fed will either cut rates or they will continue waiting to cuts. Obviously, the chance of rate cuts has gone down substantially since Trump came into office, because obviously he loves his tariffs, and tariffs do usually cause inflation to go up. But maybe that's not the case this time. We'll just have to see. There's really no point to speculate. The report is in just a few days, and depending on what we see from that, we'll see what the Fed does and how Trump reacts and how the stock market reacts, and it's all going to kind of tie together. So with all that being said, it is starting to look more and more like a dip buying opportunity. I mean, obviously you don't get these types of dips very often, and it could dip further, but this could be, in a couple of years, seen as an amazing buying opportunity when stocks got ridiculously cheap. And personally, my favorite stock out of all of these is Nvidia. It was actually about $85 at its low today, and I mean, that is just wild to me. It is still, kind of overvalued, I guess, but really, with what Nvidia will be able to do in the next couple of years with AI and everything, I think they're super cheap right now, and they have actually rallied all the way up to $97. And yeah, I mean, I think they have more room to go up higher because obviously the all-time high in Nvidia was 150 about 2 months ago or 3 months ago. And if you made it this far, let me know down in the comments which of these stocks you're going to be buying, or whether you're just waiting with cash on the sidelines for a better dip buying opportunity. You think we're going to go down further. But yeah, that's going to do it for this video. Hope you enjoyed, and see you in the next one.